Welcome to Taxed and Confused, the podcast where tax administration meets real talk. We are your hosts, Lizzie and Lisa, two tax nerds on a mission to decode the rules, demystify the system, and maybe even make you laugh along the way. From tax returns to objections and everything in between, we're diving into the world where the burden of proof is on you, not the ATO. That's right, this isn't criminal law. In tax, you're guilty until proven compliant. But just a quick heads up, this podcast is for educational purposes only. It's not tax advice, and it's definitely not a substitute for professional guidance tailored to your situation. So brace for bureaucracy and join us as we explore the weird, the wonky, and the wildly important world of tax admin. Because when it comes to tax, we're all a little taxed and confused. So Lisa, in this episode, we're breaking down the biggest tax time traps, from dodgy deductions and finfluencer advice to choosing the best time to lodge your return and understanding what the ATO already knows about your finances. What do you think about that?
I think that sounds like a pretty good place to start at this time of the year, Lizzie. Everyone seems to be talking tax at the moment with everything happening in the media and the tax changes that are down the track. I've got clients that are coming to me and going, hey, Lisa, can we do this? Can we do that? And I go, no, that's further down the track. For 2026, business as usual. So what do we need to worry about? And, we just got to know about our digital footprint, Lizzie. I think we've all got to be worried about that. We're talking about, the Office of AI in the Prime Minister's office, and using AI even. We can talk about that through today as well. Talking about AI, to help us with our tax returns. Warning. All of that's coming through. So let's find out what we know and what we don't know, hey?
That's it. And I think this 2026 tax time is particularly confusing. And there's a lot of, I guess, I wouldn't necessarily say misinformation. I think there always is some of that going around, but with a lot of media talk around reforms and changes that have now actually, some of which have gone through, they're now actually enacted. They've received royal assent, but for 2026 tax returns, that's all a little bit, let's park that. Let's not worry about that. That instant tax deduction of $1,000 that we've been hearing all about, and it sounds kind of wonderful. Just set that aside. If you put that in the 2026 tax return, you're going to get a little bit of a bite in the end when the ATO knocks that one back. So there's a lot of that confusion, a lot of, talk about influencers on social media telling us how wonderful we can, get returns and have these big amounts flowing back to us. Those kind of things should certainly send out some red flags and caution when we start approaching compliance this year. So what are we talking about? What is the main concern when we look to those influencers on social media? What's the big problem with that, really, when we break it down in simple terms?
Well, it's a bit like what you put in the disclosure at the start of what we're talking about. It's for educational purposes only. A tax agent or an accountant can't necessarily provide financial advice or legal advice. And the reason that we have all those caveats on it is everyone's tax position is different, Lizzie. So, you talk to someone at a barbecue or a meeting or over dinner and they say, I got this much back. And someone says, well, I didn't get that much back. People don't quite understand how a tax system works, because it's not like the government's giving out money like they did during COVID. Those times have gone. You've got to have paid some money, or your employer's paid so much. Someone must have paid some tax on your behalf or yourself to get the money back. And that's the problem with the non-regulated, not a tax agent, not registered with the Tax Practitioners Board in this finfluencers. Now, I follow a lot of people on Instagram and things like that. Some are financial advisors, and they're registered. Some are, tax agents and accountants that are registered, but there's also the ones that go, oh, I'll tell you what your tax agent or accountant doesn't know. And you go, well, come on, guys, we know we know as much as anyone else does, and we know how to apply it. Because even with when you were talking, Lizzie, about all the changes that are happening, Tax law is very convoluted and it's taxed and confused for a reason that you tweak something here, it's going to have a ripple effect
Mm,
across other ones. And, we've got three levels of government.
mm.
We pay taxes at all levels of our government. It's that interaction as well,
Yeah,
right?
yeah.
So
And so
it's
like
all that.
often, yeah, and if there's something that's sounding really amazing, there's probably a lot more to it, or it might be too good to be true. So it's great to see these and think, oh, does this apply? But it's putting that critical mindset on, that, skeptical hat on, to actually contemplate, well, what could this really be about, or what are the risks here? Is this really something that I can do, or is it stretching the law, or potentially being fraud? Certainly, if there's promises of big tax refunds where you've paid no tax and you're being asked to pass over your login details, that should be a horrifying warning, to be like, no, no, don't. You should not be passing over login details to anything really ever, because that is, in a sense, a massive issue of essentially letting free access to do as they please to unknowns, that something that you're ultimately responsible for. Even if you get your tax practitioner to do it, if you get your friend to do it, whoever's actually doing the tax return for you, you are
Oh, you're dead.
ultimately
Yeah.
responsible. And so if they do something that's reckless, if they do something that's fraudulent, you are still going to be pinged on that. You will pay the shortfall tax, you'll probably pay interest and significant penalties because of the recklessness of that. And that's been shown in the courts quite recently, where access was provided, problematic things were lodged, that taxpayer themselves was found to be reckless, and that was held up,
Absolutely.
through that court process. So we've got to be really, really careful. So my next point goes to the fact that, okay, we've been talking about broad facts that may not be applicable to a taxpayer. This is where AI usage can get a bit murkier, and new
Hmm.
concerns can crop up. So we, in
Hmm.
theory, can provide more specific information to AI tools, which needs to be done so with a lot of caution. We shouldn't be putting in our tax file numbers or financial statements, bank information
That's my
in
biggest
those
issue.
tools. Oh,
Yeah.
that's a
That's the
big, big,
privacy issue.
oh.
It's the privacy issue that worries me the most, with people putting too much information
Mm.
online and through
Yeah.
any Gen AI tool, Lizzie. I
Mm,
think that's really where it comes down to. And then um, I'm sure everyone's used Gen AI. Everyone's used it to some extent, even if all they've done is a Google search and Copilot spat something out at them. Okay. But the best test of AI is put in a question or a prompt, if we want to use those terms, of something that you know the
mm,
answer to, right? And see what comes out. And
mm,
then what you want to do is you refine the question or the prompt so you get the right answer. Now, think
mm,
about that from a tax point of view, where we've got multiple volumes, everything's interactive with everything. We've got different state taxes and federal taxes that come into play. You've got to write a really good question or a
mm,
really tight prompt to get the
mm,
right answer out.
mm,
I remember someone talking to me about saying, oh, you buy a home and you can get rollover relief when you buy your next home. It's Section 42 of the Tax Act or something it spat out with. And I'm going, well, that's not right. And you realise it's the Indian Tax Act because they
mm,
haven't
mm,
specified, ATO, Australian Tax Act. It's got to be in Austlii or
mm,
whatever we say. So you've got to write a really tight prompt with those sort
yeah.
of things, Lizzie.
Yeah, and you've got to just be have a general awareness of how these tools are trained. They're not a specific
Mm.
tool that's been trained solely on a quality tax data set. It's capturing everything on the internet, from all those kind of weird and wonderful web pages to maybe the more legitimate sources. So again, you've got to be clear on what the law is in Australia. You've got to understand the interactions, as you was talking about before, and the more bigger holistic pictures as well that may be going on. So it may point you in the right direction, it may be on the right pathway, but it shouldn't be the point that you stop considering what's going on. It should be the point where, okay, this helps me support some processes to contemplate what could be the tax implications, but it shouldn't narrow your conception. And you've got to be careful of how you lead with your prompting. You could lead it into a particular pathway and therefore miss this whole other kind of contemplation of what could be going on. So it can look amazing. It can really produce what looks like some really strong outputs, but you've really got to delve deeply into that. And as we said, that, being really cautious about whether you're putting in information that really shouldn't be in there in the first place. And I think
the tax act
agents,
is bespoke as well, Lizzie. The tax act is bespoke. Right? We always say depends on the facts. I mean, I'm sure both of us have done, tax tests and tax assessments where they say, here's the fact pattern, and then they give you a late breaking fact that changes your advice completely, right? So you've also got to think about where is the AI pulling the data from. And I often get, a question from a client that says, this is what the ATO says. And remember, when we look at an ATO web page, Lizzie, it's not referenced with legislation like we're really au fait at reading and we know how to read legislation properly or as good as what we can. It's not referenced. So like even ATO web guidance is like 80% right. It's a bit of a Pareto effect. It's for 80% of the clients getting it right.
Yeah.
So you've still got to understand it all. So there's a number of things going on in the finfluencer space. One is if it sounds too good to be true, it probably is. And if they've come up with a strategy to beat the ATO, guess what? The ATO's can see that like we can. They can do a desk audit and go, there's this Instagram influencer that's saying these things. Oh, we better nip them in the butt and find out what's going on. And then you've got the other influencer that says we can do your tax for you. And as you alluded to before, the a tax agent will never ask for your MyGov login, will never ask for your password. We, as a tax agent, a tax practitioner, we get in just through your tax file number, right? But even be careful with that. I'm not allowed to send a tax file number electronically through email, text, WhatsApp or whatever. You've got to be really careful with that because that is a unique identifier as well. So you've really got to understand what is real and fact and what isn't, because the ATO's got a heap of information about you and also what other people are saying.
Yeah. And I think they collect somewhere over like 600 million pieces of information. So they, it may not seem like it, but they have a lot of information behind the scenes, some of which, or a lot of which, would filter into the pre-fill that would help support the preparation of a tax return. But a lot of it would be used for that audit analysis to look to see whether, how you live your life, if you've got that yacht, if you've got that holiday home, can you afford that based on your income that you're declaring in your tax returns. So there's a lot of background analysis going on to see if it makes sense or if there's red flags going on. So a lot of information will be sitting there. You will see some of that streaming through, like your income from wages, interest from bank accounts, where it's, there's that clear link with that tax file number. It may flag even some crypto, but even the crypto data matching may be limited in scope as well. So it's really important to contemplate that that's a starting point as well.
It's
that the
prompt,
ATO has
Lizzie.
a lot of information.
It's a prompt, I think. The ATO gives you the pre-fill. That's what we call it, the pre-fill, which is basically the data that the ATO's got that they'll share with either the tax practitioner or the individual. Okay, but it's all assessable income based. It's all, we can see this, we can see that. It doesn't mean it's complete. It's just a prompt to say check. So the ATO will see your first 20 CG share transactions. There'll be a prompt for crypto. There'll be a prompt for you've disposed of your property and those sort of things. And then you've got to deal with the tax outcomes for it. But the ATO know more information than what they share with you, share with us as well. So that's why I said it's a prompt and it's not complete. Yeah. And that's why the ATO and Anita Challen's been doing a lot of media of late saying, hey, don't lodge in July. Wait till everything comes through. Okay, so the things that come through quickly are like you what do they call now? Income statements, aren't they? I always still call them group certificates. Group certificates, payment summaries. Now they're called income statements, but I just find income statements are confusing because it sounds like financials. Income statements, when they come through, that come through quickly. Dividends came through very quickly. My
And the
interest
distributions for trusts are a bit more
are very
delayed. Yeah,
MITs, managed
August,
investment
yeah.
trusts, are always late because they've got to do all the distribution reviews. So that's usually not till August, September.
Mm,
There's a lot of things. If you've made a concessional contribution to your super fund, that's
mm,
pretty much comes through straight away as well.
mm,
So I
mm,
think people have to think about, where have I dropped my tax file
mm,
number?
mm,
Banks, stockbroking accounts, employers, um, what else have we got? Superannuation funds,
mm,
all of
mm,
those things are all linked. All right. So it's your
mm,
tax file number that's holding it all together. But I
mm,
think the really important thing, it's not complete. It's just a
yeah.
prompt and it's a good start. So
Mm,
I give my clients the pre-fill and say, does this look right? Do you agree with it? What have we
mm.
missed?
Yeah. Are there bank accounts with interest that aren't listed there? Are
Mm,
there dividends that are missing that needed to
mm,
be added? If it's flagged a CGT event, so a disposal of shares, for example, there's a bit of work that might need to go into that and documentation that needs to be compiled to make sense of what's going on.
yeah. And the
It's
gig
certainly,
economy comes
again,
through as
yeah.
well.
Mm,
For those people that drive for Uber Eats or DoorDash
mm,
and things like that, that all comes in pre-fill.
mm,
If you've used a eBay account or something, that all
mhm,
comes through with pre-fill as well. So there's a lot of things. So all these platforms give
mm,
information, and you've then got
mm,
to reconcile it. Stripe
mm,
comes through. Those sort of things. So it's amazing what things come through that the ATO know about.
mm,
And that's
mm.
why they say don't lodge early.
Yeah.
Otherwise, they're going to amend a return or say, are you sure? Or they'll
Mm,
just reject it.
mm,
So
mm,
what happens for us with, if all the interest doesn't come through, and by the time you get the client to lodge it and then you sign, oh, sorry, client to sign it and then you sign it and lodge it, if a bit of interest has additionally come through, it'll just reject it. You won't even be out,
mm,
and you go, why has this return been rejected? Because there's been a data mismatch.
mm, mm.
And so you have to acknowledge if you think that the pre-filled data, the data the ATO's got, is wrong, because the ATO's gone, especially for interest, we're certain. They have certainty
Mm.
indicators on that, Lizzie,
Yeah.
and it's
Yeah,
absolutely
exactly.
correct.
Yeah, yeah, for
So
sure.
and they do that. There's a lot. I'm seeing people, we're roughly middle July at the moment.
Hmm.
People are lodging, and a lot of returns are getting rejected because
Mm.
you've got the data mismatch. The
Yeah.
ATO is saying, hey, think about it again. We're not processing this. We think you haven't collected everything. But
Yeah,
of course,
yeah.
that's all for assessable income, because
Mm.
that's in the ATO's best interest.
Yeah,
Why
that's
do
it.
people want, to go to a tax practitioner or spend time collecting receipts and things like that? It's all because of the deduction
Mm.
component that
Mm.
adds to your taxable income. Because remember,
Yeah, that's
taxable
it.
income is tax profit, not just income. It's net,
Mm.
if we want to
Mm.
call it that as well.
Yeah.
It's a weird
And I
thing how
think
we define it.
the ATO stats on around the 8th of July indicated about 600,000 taxpayers had lodged their tax return, majority using my tax, so doing it themselves, not using an
Mm,
agent, which is a reduction, I think, from the prior year, but still a lot of, perhaps taxpayers getting it a little bit too soon and probably a little bit at a higher risk of, yeah, not having captured everything. Because remember, we've got through as individual taxpayers who are doing it themselves, got through till end of October to do the tax returns. So, holding off that little bit further, particularly depending on the mix of investments that the taxpayer has and the delays in that data coming through, it can be a lot better to hold off. Obviously, if we're anticipating a refund, it's nice to be able to access that refund, but ensuring that it's right so
And I think that's
there's
what's
not
driving it,
problems
Lizzie.
later.
I
Mm,
reckon that's what's driving it. And what's driving
mm,
it is people want refunds. So, if it's someone who's just got a part-time job at the local fast food and maybe they have a little bit of bank interest, they're not
mm,
going to be claiming, they might claim a bit of, I don't know, washing
mm,
or something like that of their uniform if they're at the fast food place. Those are the sort of people that can lodge early,
mm,
and you hope that the pay-as-you-go withholding tax that's
mm,
getting taken out of their salary is right.
mm,
But
mm,
it's sometimes not, right?
No.
If you've got one job and you work roughly the same hours and get the same pay throughout the time, your pay-as-you-go withholding should be about right.
Mm,
But
mm,
if you're working and got lumpy number of hours, or you've got
mm,
multiple jobs, even
mm.
if you do the right thing and tick, I'm going to only claim my tax-free threshold in one employer, there's still not enough withholding taken out.
Yeah,
So
yeah.
those are the taxpayers that'll get a bit annoyed going, oh, I thought I was getting a refund. I always get a
Mm,
refund, but they're in a payable. So
yeah, yeah.
again, it doesn't, I feel like historically our tax system has always been set up to say too much tax has been taken out. So when you
Mm,
lodge a tax return, you'll get a
you get a
refund
refund.
back. But I'm not seeing that now. Most people are
No.
now impayable, and that could be
Mm,
what's driving the changes
mm,
to new offsets down the track in
mm,
future years, and this instant $1,000 deduction that's come
mm,
through as well, but not for 2026, which is what we're
mm.
doing. Please
Yes,
remember, it's
yes.
basically business as usual. All
Mm,
bets
mm.
are off. It's 2026 is very similar to 2025. You're
Yeah.
not getting any bonuses from the government or treasury or the ATO because of that.
Yeah, for sure, for sure. So we talked about the very simple tax returns that
Mhm.
might get lodged through my tax that may be able to get that earlier run and completion. But a lot of taxpayers still use tax agents. That's because they're probably looking at more complex circumstances. They're probably dealing with more, business groups and activities there. So it does make sense in a lot of instances to use a registered tax agent, and it's important when taxpayers decide to engage in the services of one that they are actually registered, that they are
Absolutely.
registered with the Tax Practitioners Board. And the great thing is that there is a website that you can look up to confirm that. So engaging with one, it's always important to check that they are registered, to make sure that you're not getting services from someone who is unregistered, which is actually illegal. And there is a need to stamp out that problematic behavior as well. Um,
Yeah,
yeah, yeah.
even just check a Google review or something
Mm,
like that. I mean, I find that I hear stories about individuals using unregistered agents, but are they agents? That's another
mm,
question. Is it unregistered people to do their tax return? And the signalling is also if they want to access your MyGov site, as I've already said.
mm,
But I feel like you do your Google searches if you're going to get a plumber or an electrician or real estate agent or something. Do the same diligence with your other
mm,
professionals as well,
mm,
and
mm,
make sure that you've got some, they've got their bona fides to do the right thing,
mm,
because tax practitioners can't work miracles. We can't
mm,
give you a refund if you haven't paid any tax,
mm,
and we can't
mm,
really control what refund you get. We're applying the law. That's what we're
mm,
required to do as tax
mm.
practitioners. We have an obligation under the Tax Agent Services Act to apply the tax law as is, and that's what we've got to do.
Yeah, yeah. So it's good to engage early before the end of the tax year, before you're engaging in whatever investment activity you are, so you can get guidance to see what the tax implications
Mm.
are as well. Particularly if you're engaging in the gig economy or doing some interesting activities outside of your everyday job, because you may have unexpected
Hmm.
tax obligations that begin to arise at some
Mhm.
point. When does that hobby turn into a business? That influencing activity that you might be doing, maybe building an audience, starting to develop some sponsorship activities, getting some free goods, doing all that, getting invited to do things. When does that become something that's actually taxable as opposed to a hobby? And that's something that we've got to be really mindful of in a social media world.
Mhm.
So looking to the difference, like moving from income discussion to deduction discussion, there's some really important things to think about when we look to what we actually claim. And the ATO talks about three golden rules in claim deductions. Do we want to run through what they are?
Yeah, we might as well run through what that is, because it's well, it is for the time being, what we need to do. So we're talking about earning assessable income. Okay, that's what
Mm,
we call it. So earning income. So most people will be on salary and wages. So what we're talking about is the deduction has to be directly linked. There's got to be a tight link to the assessable income. Okay, and it's got to be during earning that assessable income. that you've spent some money, and you'll have to have spent the money and not been reimbursed. Okay. And the third one is you've got to be able to prove it. Got to be what we call substantiated. Now, is that through an invoice? Is that through a bank statement? You've got to prove that you've spent the money. And it's a really interesting discussion that I'm thinking about now, especially with the changes that are going to be in subsequent years. And the case law that you've talked about as well, Lizzie, is that we find that the ATO are now asking taxpayers, there were individuals who were employees, their employer, did they have to spend the money? Right. And that's where it comes down to, because like if you're needing to spend the money for your job, for your earning your assessable income, did you really have to spend it? So they're now asking the employer. And there's a case recently that where the individual claimed car expenses. The ATO rang the employer and said, he's claimed car expenses. You need to use his car for his job. No, we give him a company car. What's he claiming car expenses for? So that nips it in the bud as well. Right. So I'm now adding to my checklist, talking to my clients, is saying, if you're required to spend the money, why didn't your employer pay for it for you? Because it then triggers that second golden rule of saying you can't be reimbursed. And I think that's where we're heading. And I think that's a really important question to ask. And then with substantiation, I went and bought something from JB Hi-Fi the other day. And what do? They say, here's the receipt. Can I have your phone number to send you a digital receipt? I've got this now digital receipt. I can share it with you. I can share it with anyone and go, here's the, just I won't say what I bought because it won't be it's not deductible, but say I bought a webcam or something like that, or a thumb drive, for work. Anyone could claim that receipt. It hasn't got my name on it. So then do we need to match that with my credit card statement? Is that what, is that the level we need to do now? And then someone says, no, I paid cash for it. I'm going, really? How many people actually pull out cash now? COVID sort of made that die, didn't it? So again, there's a lot of scrutiny, and that's what we do as tax practitioners. If someone comes to us to do their tax return for deductions, we just ask that extra question. And it's not that we don't believe our clients. It's this is the rules to make sure that it is really deductible. Okay.
Yeah. And it's really, really important that you do get it right. And a lot of issues often come down to the fact that, well, perhaps those expenses were private in nature, or in part only for business purposes. So it should have been apportioned, for example, or you've claimed a home office using the cents per hour rate, but then also claimed expenses that are captured within that rate, so double dipped. So
yeah, like mobile phone is a big one.
Yeah. There's a lot of tricks and issues that it's easy to get things wrong when we have to look at the interaction or what actually deductions mean, that link with being incurred in relation to earning income, but also to the extent that it is. So if you've been driving that car to and from work, well, it sounds like it's for work purposes, but it's actually not. The law, the cases that have gone before the courts have been very clear that if you are driving from home to work, that puts you in a position to work. It's not actually incurred in working, so that travel is not deductible at all, even though that sounds a little bit strange. Same with childcare fees. It puts you in a position to work. That's a little bit more controversial. A lot of issues around that and a lot of debate around that. But the law as it stands is that those are not deductible. They are private in nature, and so we can't claim those. And same with that home office. If it's if it's not an exclusive place of business, the ATO is not going to accept that interest on mortgage or the rent. But depending on the circumstances, if you're genuinely working at home, not just answering emails, you may be able to claim a cents per hour rate. So there's a lot of ins and outs that we've got to be really, really careful of.
And it's not, Lizzie, and it's also not the ATO making the rules. No. Right? Everything you said then is from judicial law, right? Judge-made law, right? You've got Lodge's case, you've got Payne's case, you've got Hall's case. I think you went and were in the courts for that one as well to see the final decision on that. All of these things. So the ATO is just applying the law. So it's their interpretation of the law. Okay. And we have a self-assessment system. So it's up to us if we agree with how the law's applied. But your general taxpayer that doesn't use a tax practitioner or a tax lawyer to do anything, their knowledge of the law won't be as sophisticated as someone like you or I. Okay. And that's what we're talking about. And again, the ATO is just applying the case law. But, you were saying it's controversial, some of the cases. I can't remember what year Lodge was, but that was, 1975 or something. As I said, I won't quote exactly what the year is. I can't remember off the top of my head. But again, I'd love those cases to be retested by the courts, or at least the ART, the Administrative Tribunal. Because I'm thinking, I was talking to someone the other day about Payne's case, which just says from home to work is private, basically. You're going, but think about what we do now. You jump on the train. You always see people working on the train. You jump in your car. You're going to be making a phone call and things like that. So those rules are you don't start earning your assessable income till you get to work.
Whereas
now
here,
people
the
are working
mobility,
from home as well. Yeah, all that sort of thing. It's sort of like, but you can't make the decision yourself. You've got to either get a private ruling or you've got to wait till there's a court case to say, I'm going to apply this. Right? Because we've got two barriers of law, haven't we? We've got the legislation, and then we've got the case law. And that's all we're doing. We're just applying our interpretation of that. And that's also, getting back to AI, that's why AI can get it wrong. Because, there's plenty of, we're having a giggle because we're not lawyers, but, the lawyers, get very, very hell-bent on one little word and the meaning of that word, like just before or something like that. Well, that's two words, but anyway, but that's where the nuance of that doesn't get picked up by AI. They're just following a set of, ones and zeros and rules in effect, and then making some, connections between it. So it's
and AI's
really,
been
really
trained on all the blogs, the articles, the hype, the controversy, not just the case law itself, and looking at what the principle that actually came from the law was. So you get a lot of that interpretation that may or may not be on point. It gets a lot of that debate embedded in it. And obviously, if you're the one that does submit it and then it gets audited by the ATO, amended, you then object to it. It could be you that goes through the courts and establish that modern contemporary precedent too. Depends on the risk appetite and the significance. But if it's an issue that comes down to your facts and circumstances, it's probably not going to be something that is really going to get through the courts, because it's not going to be a substantive issue of law. It's if it's just based on the facts and circumstances as well.
Test case, test case only gets sponsored if we're picking up the law, like the Bendel case, right? That was very much a test case, but we're picking up a very specific part of the law, a very, very narrow part of the law that was getting tested. Yeah,
and again, it comes down to the fact that we're seeing changes in the deduction side as well, with the instant tax deduction coming through. So again, AI might start to be picking up incorrect application if it's not nuanced enough or not understanding the timing that we're talking about. So it can blur what it's going to spit out as applicable to a taxpayer as well. So you've got to be careful. The tax law does change quite regularly. And so, again, something to be mindful of when we contemplate the use of tools like AI, that we do need to be up to date with what's going on now, or how the law is now, or when you're incurring expense. So if we wrap up, what is there something that if you've got one something piece to hand over for this tax season, what would it be? So would it be keeping records, ignoring influencers, verifying AI advice, declaring all income, lodging at the right time? What would be something?
Tick, 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 tick.
What's your biggest concern?
I think the biggest message that I'd like to say is every single taxpayer is very different, Lizzie. And don't get caught up by someone getting a huge deduction or whatever, right? It's a bit like the gambler. They only tell you about your winnings, not your losses, right? So I think that's where it comes down to. So I think it's really important to make sure that you contextualize your tax return with what you've got, and keep all your records. And if you're unsure, just write, we write file notes all the time. We've got to keep what we say contemporaneous documentation. And sometimes that can just be a file note. If you're claiming something that you don't need a receipt for, at least justify how you worked out the number, especially for things that you don't have a receipt for. The kilometre rate, washing, all those things that still, even though they say you can claim up to 150 for washing, well, just work it out. Would you even do $150 worth of washing based on the guidance
Yeah.
from the
Yeah, think
ATO.
about the
So
fact with washing, there's like 4 weeks annual leave you're probably
yeah,
getting. If you've been
yeah.
sick at any of the time, have you mixed your washing with other things?
Well,
It,
as
you
you
know,
would,
it's
and it's those sort of things. So at least have your documentation and don't lodge too early, because there's
mm,
so many times that you've closed a bank account, you've got a little bit of interest, and interest is a little bit higher than normal. So you're going to find your $20
mm,
here and your $30 here,
mm,
even on a closed bank account. So
mm,
again, wait till everything comes through. Don't reinvent the wheel. Your tax
mm,
time should not be hard for people as well.
mm,
If you're
mm,
not going to be, adamant on getting as many deductions as you can, and trying to
mm,
push the envelope and be maybe a little bit risky than what we would
mm,
suggest, assessable income all basically comes in, apart from,
mm,
your gig economy and your extra side
mm,
hustles. So
mm,
again, don't lodge too early and make sure you keep all your
mm.
documentation, right? And
And
justify everything.
And just going to your point on the gambling example, there was a great case recently on gambling, and that's where a
Mm-hmm.
taxpayer had a fairly minimal taxable income, so their wage earnings were fairly low. I can't remember the actual figure, but maybe 40,000 mark or
Yeah, something
something. I
like that
can't
it was, I think
remember.
I can remember.
But they
Yeah.
had that, but then they had been spending in gambling. I think it was something like $800,000 thinking into making a lot of losses. But they sunk a lot of money into gambling, and the ATO actually called them out on this on the basis of, well, where did you get that money to sink
Gamble.
into
Yeah.
gambling in the first
First
place?
place. Yeah.
And the taxpayer did provide some arguments around being lent money by people that couldn't be verified. The WhatsApp messages were lost, so there was no evidence objectively to
Mm-hmm.
show that this money had been lent. And so, guess what happened? That
Mm-hmm.
income, or that those amounts coming in, became assessable income for the taxpayer. So, quite a
Exactly.
fascinating
Exactly. And
case.
the same, everyone
Mm,
Skype, can I use the word Skype? Skype's on social media as well, Lizzie.
mm,
And,
mm,
they're on a holiday, but their taxable income's at $40,000 and they're, on a yacht in the Caribbean or
mm,
the
mm,
Whitsundays or something. You go, well, how'd you afford that? Because,
mm,
there's digital evidence of everything.
mm,
And,
mm,
you alluded to it. They call it the asset betterment test. So it's
mm,
basically saying,
mm,
can you afford your lifestyle based on your taxable
mm,
income?
mm,
It's as
yeah.
simple as that, or are you just redrawing your mortgage or something like that? I
Mm,
mean, we don't know what's going on. So
mm,
again, remember that you've got a huge digital footprint. The
mm,
ATO know more than what the general public can see about your digital footprint. Make sure don't lodge too early, and make sure you've got all the
mm.
documentation to support why you've claimed things, even if you've done the calculation.
Mm.
That's how I would say it.
Yeah,
The
and if
main
you
things to
and
worry about.
engage in a registered tax practitioner, seek advice from a registered tax practitioner, and you can look up whether they're registered on the Tax Practitioners Board website. It's really easy to do.
Mhm.
So with that, that's it for this episode of Taxed and Confused, where the rules are rigid, the paperwork is endless, and the burden of proof is all yours. If you enjoyed today's deep dive into tax admin, don't forget to subscribe, leave a review, and share it with someone who's just as confused as we are. And remember, this podcast is for education and entertainment purposes only. It's not tax advice, and we're not your tax agents. Thanks for listening, and until next time, stay curious, stay compliant, and stay just a little bit taxed and confused.